Hello everyone, and this is going to be a video on what I believe is the most overlooked as well as one of the most powerful concepts that ICT has taught. Now, this is going to be part one of this installment. We're going to do multiple videos on the immediate rebalance because it's so good and you can use it in so many different ways using the logic that ICT has taught. Okay, we can use it on multiple time frames. We can use it coupled with different strategies, different concepts, different PD arrays. It's a very, very powerful tool, but it's very, very simple to understand and see on your charts. So this video is going to be the basis of it. And then in the future, we'll have future installments as well. So just like every other concept, we need higher time frame bias in narrative. This is just another tool that you can use in your trading, in your price reading, okay? So in order to understand what the immediate rebalance is, it's important to understand the fair value gap. So I'm sure all of you know and can see the fair value gap formation. It's just that 3-candle formation, and we leave this gap here. So we leave this imbalance here. With an immediate rebalance, we don't leave a gap. So the logic here is with a fair value gap, right? It's more likely for price to return into this. With immediate rebalance, there's no gap that price needs to return to. There's no inefficiency. There's no imbalance that price would need to return to, like the imbalance we have on our traditional fair value gap. So the important rule of thumb with immediate rebalances is that we want to see expansion during the 2 candles that follow the immediate rebalance. So here on the left, we see a successful immediate rebalance. We get that formation here where there's no gap left. So this third candle, 1, 2, 3, the third candle is coming back down into the wick of the first candle. And then it does exactly what we want it to see, expand during the following 2 candles. On the right, we can see a failed immediate rebalance. We get that immediate rebalance here. And then on the next 2 candles, we would want to see that expansion. But in this example, we don't. We see price start to slow down, start to retrace. Okay, and we can use both a successful immediate rebalance and a failed immediate rebalance to our advantage. So using that logic, right, we can combine the immediate rebalance with a macro. Okay, and things become really interesting, really powerful. So if a macro is basically just the inception of the spooling of price, okay, a time during the day where we expect the algorithm to start delivering to a inefficiency or a liquidity pool. If we combine the immediate rebalance with this, it becomes extremely powerful. So if we want to see that expansion during the 2 candles that follow the immediate rebalance, and it is occurring during a time, the macro, that we would want to see price begin to spool, we can understand not only what we want to see in price, but when we should expect movement in price. So this helps us out with our entries, with understanding when not to enter, if it's before a macro, right? If it's before the time that we want to start seeing that spooling of price. So if you combine this immediate rebalance rule, right, with the expansion after the 2 candles that follow the immediate rebalance, and then we add the other aspect of actual time with the macro, it becomes really, really powerful. And we're going to take a deeper look at this. We can look at higher time frame immediate rebalances that occur during macro times and go and work within those higher time frame wicks. Okay, so if I'm watching price on the hourly, you might say, how do we get an immediate rebalance on an hourly chart during a macro if a macro is usually only 20 minutes long, right? Don't you have 60 minutes in the hourly candle? Yes, but if we see this on the hourly chart, this immediate rebalance formation, okay, this signature, we want to go into that on our lower time frames, into that upper wick of that first candle and look at what is occurring. We want to investigate what is occurring inside of that wick because we get the higher time frame immediate rebalance. In this example, we'll look at a 1 hour immediate rebalance, but it's during the time of the day that we would want to see that spooling of price begin. So let's go take a real look at this in the charts. So here we are looking at the hourly chart on the S&P from Monday, November 13th. So as you can see, looking at this chart, we come down in the morning and sweep what? This sell side liquidity, this clear major swing low right here. On top of this, we have bullish bias, and we won't get into why that can be for another video, or just come join our Discord to trade with us, talk about day-to-day bias, things like that. Okay, that link will be in the description, excuse me. But you can see here, we come down, sweep the sell side, then what occurs? We have two algorithmic signatures. We have that immediate rebalance, bullish immediate rebalance, where price opens here and doesn't allow price to create that fair value gap. It's just going down into this wick, the first candle of this 3-candle formation. But where is it going specifically? The 25% level exactly of this upper wick. So we can combine just the basic formation of this is going into the wick, but we can also look for these specific levels, because what does ICT teach? We treat wicks as gaps. So on fair value gaps, if we're watching CE or 25% levels, 75% levels, we can do the same with wicks. Okay, so here we're not only getting that immediate rebalance, but we're stopping right at the 25% level of this wick. Lastly, we have this candle forming at 11 a.m., which is going to be important. But let's go dig into this wick and see what we can find. So before we get into how we could have played this long here, why didn't we continue to the downside after we got this sell side here? Obviously, bias is a factor, but just looking at price, and again, this is a 15-minute chart, same day, November 13th on ES. But if the rule of thumb behind a immediate rebalance is we want to see expansion during the 2 candles that follow an immediate rebalance. What happened here? What should have happened here if we were bearish and we were going to dig to a deeper discount, right? For deeper sell side. We get the immediate rebalance, a bearish immediate rebalance here, right? This candle goes up into this wick. What should have happened if we were bearish? These next 2 candles should have expanded lower. Okay, adding on to this, our bullish bias after a sell side liquidity pool has been swept at the time of day, which we will look at in the next slide, at the time of day where we want to see these moves occur, this is exactly what we want to see. So just like an inversion, if you want to see a bearish order block become a bullish breaker, we want to see this immediate rebalance, this bearish immediate rebalance fail as well. So just like premium PD arrays, right, we want to see bearish signatures fail after this sell side liquidity purge at a time of day that we would want to see price begin to spool. Okay. On top of this, right after this failed immediate rebalance, what do we get? We get a bullish immediate rebalance, right? Price comes into this wick, right? And the next 2 candles, what do? Do we expand upwards? Yes. Okay. So it's a great tool to spot reversals, but you need to have the context behind it. So many things go into this, but once you start to see it in price, and it'll just come with experience, journaling, reviewing, once you start to see it in price, it's a very, very powerful tool, because if we were bearish here, like I said, we should have expanded deeper on these next 2 candles. So if this is a 15-minute chart, the next 30 minutes after this, we should have expanded lower. So it not only gives you a sense of price, but time, when we should expect things to occur. So very useful tool, but now let's go into a lower time frame and see what was going on there. So now we are down on a 1-minute chart, working inside of those wicks. So you can see on the right, this thin black line here is the 25% level of that hourly wick, and this blue line here is the high of that hourly wick. So more importantly, when is this occurring? The 1050 to 1110 macro, when we expect price to start spooling for liquidity, spooling towards an inefficiency. This is a signature right here. During the macro, we get that tap into the 25% level of that hourly wick. So that immediate rebalance. And then what occurs after that? We wick into it super quick, and then we get above this structure. Do we have three PD arrays that act as defense, right, for price to get back under here? Yes, we have this fair value gap, this volume imbalance, this yellow rectangle in here, this fair value gap here, right? This order block. So we have all these bullish or discount PD arrays, whatever you want to call it, after this immediate rebalance on the hourly during the macro, and we see these signatures in price. So this is how you use time and price and the immediate rebalance on the higher time frames to your advantage. So here as well, right, we have this order block, this white line, and the order block mean threshold. What are you getting here? Does price dig down into this? Yes, but where are you going? The mean threshold exactly to the tick of these two consecutive down candles. That's your order block. It's going exactly there. Okay, so if we already had this signature, it's reasonable to expect this to be safe, or by extension, this to be safe as well. Okay, so if you get that immediate rebalance on the higher time frames on top of your bias at the time frame, the macro, where you expect these moves to occur, it is a very, very powerful tool. So one more example. We are on a 15-minute chart from today, Thursday, November 16th, on the S&P as well. So we can see here, this candle that I'm highlighting is the 10:45 a.m. candle on the S&P. We get that immediate rebalance. We go above the CE, right, the 50% level of this wick. Why didn't we stop right there? Well, one, it's permissible for wicks to get up, right? The wicks do the damage, the bodies tell a story. But why did it go further? What was it reaching for? We will discover that on lower time frames when we go and look inside of this wick. But the logic here as well, we were bearish today. Okay, we wanted to see previous day low delivered because we have what? This low here is more sell side liquidity. Okay, classic retail logic. After this move up, they think that this is support and this is safe now. We fail to get to it here as well, and we fail to get to it here as well. Okay, we dig up into that wick above CE, get that bearish immediate rebalance. Is there any inefficiency up here for price to go up to if we're targeting this low? No, there's no inefficiency. So it's reasonable to expect something in forms of a short setup to occur during this wick. So let's go to lower time frames and see what we had. So a great example of combining these concepts, combining the algorithmic signatures with macros and the immediate rebalance to read order flow, to read price. So we're inside this 1050 macro here, but what's occurring? This blue line here, that's the CE of that 15-minute wick that we were just looking at it. So you can see on the 1 minute, we wick above it, but what occurs here? We're failing to get to the CE, the 50% of this SIBI. That's a signature. Price doesn't want to go up there. Okay, so yes, we wicked above the CE of the 15-minute wick, but we were just reaching into this inefficiency here. After we move away from that, we're inside of the 1050 macro, 1050 to 1110 macro, where we'd expect price to start gravitating towards a liquidity pool. So in this case, it's that previous day low. As you can see here, we have that 1045 opening candle. So the opening of a 15-minute candle, and this is that 15-minute open, high, low, close. Okay, so this is that manipulation leg into a SIBI here on the 1 minute, but also just above that 15-minute wick CE, giving us that immediate rebalance. And again, just like we said on the 15-minute chart, there was no inefficiency on the 15-minute chart. Why would price want to come back up here? We've already had the stop rate, okay? We've already rebalanced this SIBI. You can see we have this breakaway gap here, but after we get this signature here above the CE of the 15-minute wick, after we get the signature here and then displace away from it, we don't want to see this get filled. We want to see this be safe, okay? But a great example of how we can combine all of these concepts, multiple signatures from multiple time frames, to understand where and when price is likely to deliver. So this is also today, and we're back on a 15-minute chart. So just like the earlier example, after we purge this previous day low, we get an immediate rebalance, right? This wick comes up into this wick. So using that rule of thumb, the next two candles should have expanded lower. We did not get that. That's troublesome for the short. So if we were looking for a continuation to sell side, we would have wanted to see this 15-minute candle and this 15-minute candle. In other words, the 30 minutes after this immediate rebalance continue to expand lower. We did not get that. What did we get right after? We got a bullish immediate rebalance right at 12 o'clock. So let's go discuss why 12, why the lunch hour was important for when this immediate rebalance occurred after the failed bearish immediate rebalance for continuation. So now we're down on a 1-minute chart. And what do we see? This blue line here, that's that 15-minute bullish immediate rebalance. So this is the high of that wick, that first wick of the bullish immediate rebalance formation during the 11:50 to 12:10 macro, where we expect the inception of price to spool for a liquidity pool. What do we know as well? And again, you need context, and this is not an every time thing, but it's more likely that the lunch macro is going to run against profitable traders. So today, shorts were profitable in the morning, so the lunch macro is likely to run against profitable shorts. So what occurs? We have a low, a high, a lower low. This is your bullish breaker. You can see price wicks into it during the macro. Down close candles supporting price, fair value gap here, right? And where would we target? If the lunch macro is going to run against those profitable shorts, where would we target? Well, obviously, this swing high, this swing high, this swing high. But we can increase the probability or the likelihood, our understanding of these liquidity pools being delivered to by using this standard deviation logic from the breaker model video that I discussed. And I will link that right now if you haven't seen it, if you don't know what I'm talking about. But we're using this A to B price leg. We're anchoring our fib on that. And the -1 standard deviation is the easiest bread and butter target. So what's right next to this -1? This swing high. So if you're playing this breaker, if you're playing this 15-minute immediate rebalance here, or any PD arrays, these down close candles, these order blocks that are occurring at the time of day, right, with the lunch macro profile and this 15-minute immediate rebalance, as long as you can form risk, right, form your entry, this is what you should expect. So we have this higher probability, -1 standard deviation, and this swing high right above it. As well, what do we have? -2 standard deviation for a continued target is exactly this buy-side liquidity pool. That can be another target, and then you can start to look at -2.5 and so on. Not pictured here, like -3, -4, -4.5, just for visual purposes, for keeping it organized. But you can see we come up and get this -2.5 standard deviation, because if we expect this to get delivered to, if this is our target, it's not just going to come touch it to the tick and reverse, right? That's not what we want to see. We want to see it get through it. Where's it going to reach for? The next standard deviation level. So another great example of going and investigating, digging into those higher time frame wicks to see if we get setups during those higher time frame immediate rebalances. So thank you guys for watching. I hope this was beneficial to you. I hope everyone learned something. Again, don't confuse yourself with these things. Just start to look for them in price, start to study them, start to back test them, look for them in your journaling, and maybe you'll find them useful. Okay, again, this is part 1 of this installment because there's so many ways we can use this, and there's so many examples of when these immediate rebalances occur on multiple time frames. We haven't even talked about on the daily time frame, how we can use that on the weekly time frame. So we'll look at these examples in part 2 of the immediate rebalance video. But make sure to follow my Twitter or X, whatever you want to call it, @RealTraderTim. Our Discord link is in the description, and be sure to like, subscribe, turn notifications on, all that, yada, yada, yada. But again, thank you everyone for listening, and I will talk to you soon.